The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody on the East Coast, and good morning to our friends and colleagues on the West Coast. My name is Jennifer Schaus, and today we've got a great webinar on surety bonds, and it's going to be run by Josh Edamati from Security Bonds Incorporated. Josh is the sales manager there, and he will run through most of the content. Today's webinar is being recorded, so if you need to jump off at any time, that's not a problem. And if you have any questions, please type them into the question box over on the right-hand side. All attendees are in listen-only mode, so even though you do have questions, feel free to send them at this time, and we'll address them at the end. As I said, Josh will run through the presentation, and the questions and answers will be at the end of the slides. First, we wanted to make some brief introductions to FedBidSpeed. They are a provider of B2G software management tools. If you guys are jumping onto FedBiz Ops to look for government RFPs and RFIs and you find something that your team is going to pursue, FedBiz Ops has a great tool that allows you to manage those opportunities, assign a proposal writer and somebody to kind of manage the process, and you can input your comments in there. So it's a great tool for federal government contractors, and we encourage you to take a look at them perhaps after the webinar. Additionally, Fierce Government has partnered with us on this webinar. They're a great provider of government information. They've got a lot of intelligent white papers, events covering anything from agency news to IT and cybersecurity initiatives. And I would say that one of the differentiators is that they do provide in-depth quality compared to some of the other government newsletters that are out there. So we encourage you to take a look at Fierce Government as well. The main show today is Construction Bonds Incorporated. Company was founded in 2003. They focus on small and emerging contractors. They've been noted by U.S. SBA as the Surety Bond Producer of the Year. We do a lot of different live events in the D.C. metro area and some even out of the state. My organization, Jennifer Schaus and Associates, we help companies with GSA schedules, federal sales and marketing, a lot of the other components in the B2G sector, 8A certification, market intelligence, competitive analysis, and other services. Additionally, we host a government contractors networking event. We've got one coming up on March 19th. SBA will be sending a speaker to talk about some of the programs that SBA has available to government contractors. So we encourage you to attend that event. Now I'm going to hand this over to Josh, and he will cover everything that you need to know about surety bonds and government contracting. Josh, it's all yours.
Thank you, Jennifer, and thanks to all those who are attending here in the D.C. area. It's a little bit snowy and wet, but appreciate those of you who decided to show up. I'm going to talk a little bit about surety bonds, and for those of you that may know about it but want to know a little bit more, that's kind of why I'm here. So we'll go to the next slide. There's, kind of three, well, there's actually four here, but four requirements and opportunities that bonds kind of present themselves to. One thing that's important to know is that whether you're on a state, local, or federal, and even private work, bonding is required. If you're a subcontractor, as an example, to a general contractor, some GCs require bonds for projects as low as $25,000 or as $50,000. But on the state and local level and on the federal level, it's required for projects over $100,000. One thing that's important to note is that bonds kind of allow you to be a differentiator, and it's a very powerful endorsement to be able to say that you're bonded. Only a small percentage of contractors can say that they are bonded. So being able to say that really sets yourself apart from the pack. And these contracts are more profitable because you're not bidding against every person with a truck and a hammer. You're bidding against contractors that have been vetted, that have been qualified, and that are bondable. And we'll go to the next slide. There are three major types of contract surety bonds, which I am going to talk about today. There's the bid bond, performance bond, and payment bond. I'll start with the bid bond, and the bid bond is very similar to a earnest money deposit check if you've ever bought a home before. It's kind of a good faith submittal or proposal that you provide within your proposal that says that you have been pre-qualified by a surety company to bid this project. And that bid bond can be a percentage of the contract value, whether it's 5%, 10%, 20%, sometimes even 100%. But what that says is the surety has, they've reviewed the contract, and they feel comfortable with your capabilities, and they're going to issue this bid bond that has that percentage as a penalty should you not go through with the performance and payment bond. And the performance and payment bond are pretty self-explanatory, but to give you just a kind of a brief overview, the performance bond it protects you as an owner or the general contractor against faulty performance. Not that the paint on the wall is the wrong color, but that you just did not show up to complete the work. And the payment bond is a guarantee that you are going to pay your bills. The majority of our claims that we see are off of the payment bond because most contractors have the capability to do the work. It's just the problem that a lot of small contractors face is with obtaining capital or getting financing to be able to complete that project. And we'll go to the next slide. The first three steps that I would say before you get started in the bonding process is to contact the bond agent. We're a local agency here out of Herndon, Virginia. I've got two other guys that work with me, and they're producers as well. But the importance is finding somebody that understands bonding and that understands construction. There's a lot of insurance agents that out there that may be very good at handling bonding. I know a few of them, but some insurance agents are very good at insurance, but they just kind of use bonding as a supplemental line. It's really important to have a bonding agent that can put you in the right place to grow your company. The second step is you want to get a construction-oriented CPA, very much like getting a bonding agent that understands construction. I can't tell you how many times we've seen somebody use their cousin or their nephew or their niece to put their financials together. And although that may be good when you're getting started, when you're going after bonds, you want to be able to show clean and accurate financial reports, and especially ones that are prepared by somebody outside of your organization. So it's important to have somebody or a CPA that understands construction. And then finally, you definitely want to get a copy of your credit report. And I'm talking about your personal credit report, especially if you're getting started. A lot of contractors that call us don't have a lot of business credit, and all they are is relying off of their personal credit. And that's what the surety companies look at when they're pre-qualifying a contractor for the first time. And I can't tell you how many times I've seen that there are lots of mistakes on people's credit report, and they have not been corrected, and they can create a delay in the processing of your application and can make it very difficult. Sometimes there's old tax liens or old judgments that have been resolved, but they still show as being open. And that definitely affects your credit score and can make bonding a little bit more difficult for you. So it's just important to know where you stand, because if you don't pull it, the surety is going to pull it anyways, and then they're going to ask you. So if you want to get a head start on it, that's what we would say to do. And then we'll go to the next slide. And in bonding, we use what we call the 3 C's, character, capacity, and capital. We add a 4th C, which I'll discuss. And I'll explain briefly the 3 C's. The character is usually the first piece that we address when we talk to somebody. We want to understand that they have, good background, a good reputation, and they have good integrity. And sometimes if we don't have a lot of history on somebody or a lot of background on somebody, the best thing that we can do is to run their credit, which again goes back to my previous point about getting a copy of your credit report. The other C is capacity, which speaks about your experience, your history, your capabilities. Do you have the proper people in place to complete this project? Do you have the proper equipment to finish this project? And do you have the experience completing a job of this size? So as an example, I had somebody call me the other day, and the biggest job that they completed was $100,000, and they wanted to try to bid a $3 million project. And the contractor was very adamant about their capability of being able to complete that project. And I know the contractor because I've worked with him for a while, but I'm going to have a tough time explaining that to a bond company, that with the biggest job that you've completed being $100,000, that you have the capability to do $3 million. Now, I have had contractors come and put together great presentations, and we have got deals done like that before in the past. But generally, they're looking at 1.5 to 2 times your largest completed project when they're looking at bonding a job based on your past experience. And then the third C is capital, where it says cash is king. But that's what most of the bond companies look for. Obviously, if you have money and you have cash, it's easy to get bonds. And we recognize that that's usually the toughest piece for a contractor to kind of get. So we try to overcome the lack of capital with good character and good capacity. I have been able to put deals together where the capital wasn't quite there, but we showed great resumes, we showed a cash flow projection on the project, we showed that they had the right people in place through resumes and through performance references, and we found a way to get it done. So it's definitely possible, but those are the 3 C's. And then the 4th C is commitment, and that's the commitment to us as your agent, but also the commitment to the bonding company. You are going to be asked, if you go after a bonded project, to sign a general indemnity agreement, which jokes aside, I guess is kind of, they say, where you take the arm and the leg and the dog and all the kids. But it is a document that's very similar to a credit card agreement or a mortgage that basically says, I'm going to do what I say I'm going to do, which is perform this project and pay my bills, and if I don't, I'll pay you back. So, and then we'll go to the next slide. Now, what we do as your agent is we present your case in a bonding package, as we call it, that we send to bonding companies. And in a perfect case, it'll look like what I have in front of you on this presentation. It will be a questionnaire, which is kind of our holy grail of documents. It really tells us everything about your company, from your street address to the largest completed project to who your banker is, so on and so forth. We ask for your resume, maybe your business plan. If you don't have one, we have a very simple template which asks some just very basic questions about the direction that you're taking your company, and then references, being credit references and performance references. We will ask for the financial statements, be it personal financials and business financial statements. Work in progress schedule, which shows us all the projects that you have ongoing currently. So if you're working on a job at GSA's headquarters, that'll be on there. Or if you have a job working for a GC, small job or something, that will be on there. We'll ask for bank statements and then information on that particular project. We also have a bond request form, which is a pretty frequently used term within our industry, that will kind of give us a brief overview of the project that you would like to bond, and then we ask for kind of a rough breakdown on what your estimate is on the project, And then we'll ask for a copy of the invitation for bid or the request for proposal or the solicitation or what have you. And then finally, we'll have that general indemnity agreement that we discussed about previously. But if your case is not perfect and you don't have kind of all of those perfect things that we talked about, what can you do to get a bond? There are some programs out there that offer support for contractors that don't qualify in the standard market. They call them specialty markets or non-standard markets. One of those is the use of collateral, and some companies will take like a letter of credit or a cashier's check, and then some companies actually take deeds on property if you have a significant amount of equity on your property. Funds administration, also known as funds control or escrow, which basically means that the project funds on that particular project will go into a separate account in your name, but all of the bills are paid. And this goes back to the earlier part of my presentation that said the payment bond is usually the riskiest bond. And if we can show the bond company that you have the ability to perform the work, but we just don't have a lot of history on your financial side of things, we can prevent a majority of the payment claims from coming in by making sure that those payments are protected in that funds control. The third option is the Small Business Administration. It's a wonderful program. We use it, like Jennifer said, we were the 2011 Surety Bond Producer of the Year for the SBA. What's great about the SBA is that, and they recently increased the legislation to $6.5 million for a project within the SBA, and in some cases up to $10 million, which is a great increase from the previous $2 million per project. What a lot of our contractors like about it is that it's an invisible guarantee, meaning that you'll get either an 80 or a 90% guarantee through the SBA, but when you present the bond to your owner, the owner has no idea that it is an SBA bond because the SBA provides the guarantee behind the scenes to the surety company. And the Small Business Administration will work with you if you've had a bankruptcy. If you're a brand new company, they'll look at jobs that are 2 times your largest completed project. They also count your bank line of credit as additional working capital, which is just a wonderful thing because sometimes contractors don't have cash, but they may have a $25,000 or a $50,000 bank line that will allow them to qualify for bonds through the SBA, where they were not qualifying for it in the standard market. There's also private sureties. These are private companies that provide surety credit that's not by a corporate or a regulated surety company. They are accepted by some owners. We don't use a private surety. I would just say, we say buyer beware because sometimes the surety documents or the private sureties are using assets that may not be as strong, and there is some wording in the indemnity agreements that are even worse than what we have in our documents. So that would just be something that you want to be careful of, but we're not going to use that. And questions that we get a lot is, how long does it take? There's a couple ways to answer it. I always hate to say it depends, but it really does. I mean, from the time that we get a complete package and we send it to a bond company, I mean, I've had stuff done same day, but I would say, from the time we submit your bond package to the time the bond company says okay to issue the bond, it'll probably take about a week. And then, as you continue working with us, it'll take you, a couple days to turn around your bonds. But like Jennifer is, we're very upfront and we're very straightforward with our contractors when they call us, and we just want to make sure that you're aware that from the first time that you call us, and if it's your first time working with us, it will probably take you about 6 months, realistically, from the time that you call us and the time we send you a package and you work through it and all that. it'll take that time to get a bond. And that's not because I'm going to be working with you directly for 6 months straight. It just means, you know, some of our contractors call us, we send them a package, but then they've got real life work to do. You know, they have to go out and put bids in. You know, they've got to run the management of their office, and by the time they get back to us, it just takes some time. We have had we had a really cool case last year. A contractor called us November 22nd, I think, or 23rd, right around Thanksgiving, and you know, we were taking off that. We were leaving that Wednesday for work, and they said, well, the bid's on Monday, and you know, all the bond companies were closed and everything. So they turned around a submission over Thanksgiving, got it to us Monday morning, and we got a bond approved Monday afternoon. So it is possible if you do the paperwork and you do it. It's just we just want you to be aware of what's ahead of you. And then a tip too: don't bid it with a cashier's check until you talk to us first. Sometimes a contractor will bid the job with a cashier's check, thinking that they just get the contract and then we'll give them a bond. You really want to know where you stand and where you're, you know, and what your position is before you bid that project. So give us a call first, and we'll see what we can do to help.
Great. Thank you, Josh, and thanks for everyone who has dialed in and participated today. It looks like we do have some questions coming in, and we will continue to take those, as we've got, I think, about 60 minutes allotted for the webinar today. So I will read the first question. I think you probably covered this, though. How long does the process take start to finish, including filling out the application?
That's a good question. And like kind of like it says is, you know, once you fill in the application and send it to us, it'll take us a couple days to a week to turn it around. But you know, realistically, it's going to take some time. I just picked up an account the other day out of Northern Virginia, and they just contacted me last month, and they were awarded a $250,000 project, and they qualified for the bond, and we got it issued very quickly. But then, you know, there's people I've been calling on since 2007, and I have half of the completed package, and you know, it's tough, you know, because they are working by themselves, and they want to get bonding, but they know that they've got to complete that package. But you know, one thing I say is not to be afraid to give us a call, or you know, myself or my colleagues. We typically drive out to your office, or we'll sit down with you, help you go over the paperwork, kind of tell you the tips and tricks of the industry and what we're typically looking for.
Next question reads, how much does the bond itself cost?
That's I guess that one depends as well. The bond is going to cost, generally in the industry, it will cost anywhere from 0.5% to 3%. Depending on the size of the project. And the average, though, for a small contractor getting into the business is probably going to be on the higher end, closer to 2% to 3%. Our more active accounts that we have what we call sliding rates or sliding scales, and that can go down, you know, starts at 1% and works its way down. So, but to be realistic, for an emerging contractor, you'd be expecting it to be about 2 to 3%.
Okay, great. Do I need audited financials before getting a bond?
No. The one great thing about the SBA is that they will go up to about $500,000 without even having a CPA statement. You know, you don't need to audit it or reviewed or compiled. They'll go up to $500,000 even with a tax return or with a QuickBooks statement. So that's a great, it's really a great program that helps out. And even some standard market companies now are starting to adjust their requirements and are more flexible on a on a $500,000 job if the statement makes sense.
Great, thanks. Next question reads, how does the client or recipient of the bond, or how is the client or recipient of the bond able to cash them out?
Usually there'll be information on the bond itself that will say the name of the bond company, and each bond is very different in how it's written. Some bond forms require us to put the phone number of the bond company to file a claim to make it easy for the owner. But on the bond it will say the name of the company, and it should say what the process is to file a claim. But usually it has the the name of the company and the person who signed it. That's one place to start, is to call the agent, and then the agent will direct you where and how to file that claim. But you can also just go online, once you find the name of the company, and then find the claims department and file a claim from that point.
This is the actually second half of the question, which it sounds like you probably answered. Are there predetermined criteria set in advance that would be used as a measure?
Some agencies and some sureties have predetermined requirements. They will say you have to have so much in working capital and so much in equity. But as an agent that works with a lot of small contractors, we don't have any requirements. The only thing I would say is that if you have a tax lien, that you have a payment plan in place. Most bond companies won't touch you even if you have a tax lien, but the SBA will work with you as long as you have a payment plan in place. If you've had a bankruptcy within the last year, that's going to be pretty tough. But that's pretty much it. I mean, if your credit's not in great shape, that's okay. If you don't have any experience as a brand new company, that's okay. There's really no criteria to working with an agency that specializes in small contractors.
Next question, are surety bonds used only for construction contracts?
That's a great question. Actually, no. But the majority of the contracts that require bonds are construction contracts. That's what they're known for. But there's another industry within surety called commercial surety, and that covers janitorial service contracts, IT contracts, or any kind of service contracts, whether it's hauling, whether it's, like I said, trash removal or custodial services. We're working on one right now. Actually, it's an open bid at Ronald Reagan National Airport that they have a job for the custodial services, and there's a $1 million bond requirement. So different industries do have that requirement, but the majority of it is in construction.
Okay, and then a follow-on question, is it ever used for professional services?
Yes, it is. And sometimes there's staffing requirements where the owner requires the contractor who's won the job to have staff on board or to provide professional services. We don't see it that often, but it definitely is out there.
Great. And it looks like that that wraps up. Oh wait, one more question just popped in. So is it just a matter of reading the bid instructions to know if the requirement is included?
Yes, and usually on the invitation for bid, it will say it like on the front page. It'll say a 5% bid bond is required. If you're bidding a federal project, there is that standard solicitation offer and award, the SF 1442, and I can't remember the box number, but within that document it will tell you on the front page whether or not a bond is required, and that will say whether or not what they call an offer guarantee is or is not required, and there'll be an X mark, whether it is or is not required.
If a company is sold during the bonding process, does the new owner receive the same bond?
It can happen, but the one thing that I did not include in my presentation is maybe the fifth C, which is communication. And it's really important that you communicate all of your doings with the surety company. And in the event of a company sale, that is something that the bonding company needs to know. And I can't tell you how many times that the bond company gets left out on situations like these where they talk to their CPA, they talk to their accountant, they talk to their banker, yet they don't talk to their bond person who's the one person making all the guarantees. So it's really important for the contractor to communicate with us and let us know that, hey, I am selling the company and this is the new owner. And the bond company will have to come in and evaluate the, the 3 C's, the character, capacity, and capital of that individual, and whether or not they feel it's a good fit. This happens when a father sells the company to his sons, or whether the owner of a company sells it to to one of the executives who's going into retirement. So this happens a lot. It's just be sure that you communicate it, and aside from everything else, sureties are usually okay with it.
Great. Does the bond expire when the project is completed?
It does and it does not, in that it will expire in that if you want to go after additional work, you can say, hey Josh, I just finished this $500,000 renovation job. I want to do another $500,000 job. But the bond follows the contract, and if the contract says there is a 2-year warranty or a 1-year warranty to be in place, then the bond is still technically in force. Because if you do not go and uphold your part of the bargain in there and going, and finishing any workmanship issues, they can still file a performance bond claim. So it does expire in that you can go after additional work, but it doesn't expire in that technically you're still on the hook, even if the job is done.
Great. Are bond companies licensed in certain states, or can your firm cover bonding in California?
Our agency is licensed in all 50 states, so we have the capability to handle contractors throughout the country. When the company was started in 2003, it was created with the focus kind of primarily in the metropolitan area, but here lately it's really with the merger with Murray Securis, we have the capability to go throughout the country. So we'd be glad to help you.
Yeah, I think that that wraps up the questions. We wanted to thank Josh for his time and great presentation and good answers to all the questions. Oh wait, we got one more just popped in. It was just a thank you for worthwhile someone saying thank you. So Josh's contact information is on there as well as mine. We also wanted to thank again FedBid Speed and Fierce Government for helping to promote the webinar today. Josh, any final words?
Well, thank you again. I'll give you my personal email. It's Joshua, Joshua at sbabonds.com. Our office is shut down today due to the weather, but so if you do call in, you'll probably get our voicemail. But feel free to send me an email. I'd love to start the process, and like I said, we have some other folks here in the office that are happy to help. Thank you.
Great. Thanks, everybody. And this recording will be available towards the end of the week. Thank you.